In today's fast-paced financial world, traditional credit scoring methods are quickly being replaced by real-time credit scoring, a game-changing innovation powered by big data and AI. Instead of relying on outdated reports and static credit histories, lenders now use dynamic real-time data to assess borrowers' creditworthiness instantly. This shift is making lending faster, more inclusive, and more accurate, opening doors for individuals and businesses who were previously left behind by the old system. Let's explore how this technology is transforming the future of finance. Today, we will talk about how real-time credit scoring is changing lending. So before we start, make sure to hit the like button and subscribe to my channel. 1. The evolution of credit scoring. For decades, credit scoring has been anchored in traditional models such as FICO and VantageScore, relying heavily on a consumer's credit history, payment patterns, outstanding debts, and the length of their credit accounts. These models aggregate historical financial behavior and provide a static snapshot that lenders use to assess a borrower's risk profile. While effective to an extent, these conventional approaches are often limited by their reliance on outdated information, exclusionary practices, and infrequent updates. They typically fail to consider real-time financial health, making it difficult for those with thin credit files, like young adults, immigrants, or the underbanked, to access credit. The rigidity and slow update cycle of traditional scores have long made the case for a more adaptive and inclusive system, setting the stage for real-time credit scoring. 2. What is real-time credit scoring? Real-time credit scoring refers to the use of live or near-live data to evaluate a borrower's creditworthiness. This methodology incorporates alternative data sources such as bank account activity, utility payments, mobile phone usage, e-commerce transactions, payroll data, and even social media behavior to create a dynamic, holistic view of a person's financial situation. By leveraging technologies like machine learning, artificial intelligence (AI), and big data analytics, these systems continuously monitor and update a consumer's score. Rather than relying on historical data that may be months old, real-time scoring reflects current financial behavior, allowing lenders to make faster and more accurate lending decisions. This shift marks a fundamental transformation in risk assessment, one that emphasizes agility, relevance, and inclusivity. 3. Technologies driving real-time scoring. The implementation of real-time credit scoring is made possible by a convergence of advanced technologies. AI and machine learning algorithms are at the core, capable of analyzing vast data sets in milliseconds and identifying predictive patterns that traditional scoring misses. Open banking frameworks also play a critical role by allowing third-party services, with user consent, to access financial data from banks securely. APIs, application programming interfaces, facilitate seamless data sharing across financial platforms, ensuring up-to-date account balances and transaction histories are available for analysis. Additionally, natural language processing (NLP) can interpret unstructured data, like customer support interactions or social media sentiment, to further enrich the scoring model. These technologies together make real-time credit scoring a powerful and adaptive tool in modern finance. 4. Benefits to lenders. For lenders, real-time credit scoring represents a significant upgrade in risk management and operational efficiency. It allows them to assess borrowers more accurately and promptly, enabling instant or same-day loan approvals that meet modern consumer expectations. Real-time data helps detect signs of financial distress early, such as sudden drops in income or increased account overdrafts, thus improving default prediction and minimizing losses. Additionally, dynamic scoring systems support more granular segmentation of customers, allowing for better product targeting and pricing strategies. Lenders can expand their credit portfolios responsibly, reaching demographics previously considered too risky due to the limitations of static scoring models. Overall, real-time credit scoring enhances both the speed and accuracy of credit decisions. 5. Empowering consumers and financial inclusion. Real-time credit scoring has the potential to dramatically improve financial inclusion by recognizing a wider array of behaviors that signal creditworthiness. For example, individuals who regularly pay rent or utility bills on time but lack traditional credit lines can now be scored fairly. This opens access to financial services for gig workers, freelancers, and people in developing countries, where formal banking infrastructure is limited. Real-time scoring also empowers consumers to have more control over their credit health. Since scores can be updated continuously, users are encouraged to maintain good financial behavior, with the knowledge that positive actions will be quickly recognized. Some platforms even offer real-time feedback, helping users understand how specific behaviors influence their score. This shift marks a democratization of credit, where opportunity is based more on present reality than past privilege. 6. Use cases and adoption across the globe. Real-time credit scoring is no longer a futuristic concept. It is being actively deployed by fintech companies and progressive financial institutions worldwide. In the US, firms like Upstart and Kabbage use real-time data and AI to underwrite personal and small business loans. In India, companies like CreditWatch and CASD analyze digital footprints and alternate data for real-time lending decisions. China's Ant Financial, now Ant Group, developed the Sesame credit system, which incorporates social and e-commerce data into real-time scoring. Africa, with its rapidly growing mobile payments ecosystem, is also embracing this model. Lendable and Tala use mobile usage patterns and transaction histories to evaluate borrowers. These global examples showcase the flexibility and scalability of real-time scoring across different economic contexts and regulatory landscapes. 7. Challenges and ethical considerations. Despite its advantages, real-time credit scoring presents significant challenges and ethical dilemmas. The use of non-traditional data sources raises concerns about privacy, consent, and data security. Many consumers are unaware of how their data is collected or used, leading to transparency issues. Additionally, algorithmic bias is a growing concern. If not properly trained and audited, machine learning models can perpetuate existing inequalities or introduce new forms of discrimination. Regulatory compliance also varies by jurisdiction, and firms must navigate a complex landscape of data protection laws such as GDPR in Europe or the CCPA in California. Ensuring fairness, accountability, and consumer rights in automated credit decisions is critical. Robust governance, third-party audits, and transparent communication will be essential to maintaining trust in real-time credit scoring systems. 8. The future of lending in a real-time world. Looking ahead, real-time credit scoring is set to become the norm in a digitized financial ecosystem. As AI becomes more sophisticated and financial data becomes increasingly accessible, credit scoring will evolve into a continuous and contextualized process. This evolution will foster more personalized lending products, dynamic credit limits, tailored interest rates, and real-time financial health monitoring tools. Traditional credit bureaus may transform into data brokers or platforms, facilitating alternative scoring. Regulators will need to catch up, developing frameworks that balance innovation with consumer protection. Ultimately, the shift to real-time credit scoring heralds a more inclusive, efficient, and responsive lending environment, redefining how credit is perceived and accessed in the 21st century. If you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.